Okay, everybody. Here's the TSP Weekly Podcast for 9 July 2023. I am actually out at Whidbey Island, Washington, at the Naval Air Station, Whidbey Island, visiting my son, who's in the Navy out there. So it was kind of difficult for Conan and I to both get on and do the podcast. So I'm going to just record it here. And as always, if you guys have questions, please put them in the comments, and we will definitely get to them. So it's been an interesting couple of weeks, and we got some pretty interesting things to talk about here today. So, podcast this week, we're going to look at this pattern called the island reversal pattern. I kind of got to give a hat tip to my buddy Jim Bartoloni, chart master extraordinaire. He did a post about the island reversal pattern last week, and got me to thinking that I have never done it on this podcast, and so we're going to take a look at that. It's pretty timely. And then I know I keep talking about RSI price divergence, but it's my favorite tool for a reason, and we're going to see what happened this week with respect to that. Bonus chart is going to be TNX, which is the 10-year yield, right? And the F fund. So the price of the F fund, when the price of the F fund goes up, the yield goes down. Okay, we're going to talk about this more when we get there, but the way bonds work, when the yield of the bond, right, the rate of return of the bond goes up, the price of the bond goes down. So these two charts, the yield chart and the price of the F fund chart, should be more or less 180 degrees opposing. Okay, and so sometimes it's easier to see support and resistance on one versus the other, or Elliott wave count on one versus the other. And so we're going to take a look at that. And then the weekly TSP fund charts. All right, so the island reversal pattern. As always, I like to take pretty much everything that we do out of Investopedia, so that's where you can find it right there. That's the link from Investopedia. So the island reversal pattern, what is it? Island reversal pattern is a price pattern on bar charts or candlestick charts. Okay, so you have to use a bar chart or a candlestick. You can't use a line chart, and it's going to become very obvious why. But you can't use a line chart. It works very well with candlesticks. A daily chart is the best time frame to use. You can use weekly, but a daily is the best. Features a grouping of days separated on either side by gaps in the price action. Okay, it doesn't have to be a grouping of days. It can be one day. It can be a gap up one day, and a day of above the gap, and a gap down below the next day. So we're going to take a look at a couple of examples. But it doesn't have to gap up and be above for a grouping. It can just be one day. So this price pattern suggests that prices may reverse whatever trend they're currently exhibiting, whether from upward to downward or from downward to upward. Okay, so we'll take a look. So the key takeaways: this price pattern occurs when two different gaps isolate a cluster or one day, like I said, of trading days. The pattern usually implies reversal and can apply to a bullish or bearish change. An island reversal changing from upward trending prices, right? If prices are trending upward, they're bullish, to downward trending prices, bearish, is much more frequent than the opposite. So it's saying an island reversal pattern that changes an uptrend to a downtrend is much more common than a downtrend island pattern uptrend. Okay. All right. So how does it work? Island reversals are a particular identifier because they are defined by price gaps on either side of the grouping of trading periods, right? So while many analysts and traders hold the belief that gaps will eventually be filled, meaning that prices will eventually retrace and close those gaps, we talk about that quite a bit. The island reversal is based on the idea that two gaps in the formation will not be filled, at least not for a while. Okay. So island reversal can be a top or bottom formation, though tops are far more frequent between the two. Island reversal formation has five characteristics: a lengthy trend leading into the pattern, an initial price gap, a cluster, or it could be one day, but a cluster in a pretty tight trend, a definable range, tight trading range, increase in volume, which I did not put volume on these charts, but that's okay. And then a final gap that establishes the island of prices isolated from the preceding trend. Okay, so here's what it looks like, right? We have a trend, a bullish trend. We have a gap. We have several days of narrow price range, and then we have a gap down. Okay, so this is the island. Okay, and it's a reversal, it's a topping reversal pattern. And so on the gap down, it goes down from there. Okay, so the depiction shows an island reversal top or bearish island reversal and forecasts an end to the preceding upward trend. An island reversal bottom would forecast the end of preceding downward price trend and the start of a new uptrend. So the reverse can also be, right? We can have price coming down, a gap down, price here, and then a gap back up. And this would be a bullish island reversal, right? Except this one is much more frequent. Okay. So here's a couple of real-time examples, all right? Here is a daily chart of the XLF, right? It's the financial sector. So we can see this is end of June. We had a big price move, nice support there at the 20-day moving average, and a big gap up, right? Then 3 days, tight price range, and a big gap down yesterday. So this is as of Thursday's closing price. So this is your bearish island reversal. Okay, it looks exactly the same as this. Okay, it was a great example, and it just happened to be very timely. So that's the XLF. If we look at this is a chart of high yield bonds. So when high yield bonds are going up, the stock market tends to go up, but we're not going to worry about that right now. But this is a good example of a couple of different island reversal patterns. So, like I said, it doesn't have to be a cluster. It can be one day. Big gap up, big gap down. That's the island reversal. Okay, and then price comes way down. This isn't a great example of it because the intraday price action overlaps, right? So that's not a great example of an island reversal. So don't get confused by that. Neither is this one because we had a huge gap up on this side, right? Really big gap up. But the next day did not gap down. It did, in fact, gap down, but then it filled the gap and kept on going lower. So this isn't really considered an island reversal. This, very clear, right? You have a gap up, you have a gap down. Okay. Here's another big one, right? And you can see what happens following the island reversal pattern. It's a good pattern. We haven't talked about it before. And when you combine it with the technical indicators, which is the next thing we're going to talk about, you can see here we have basically a double top, but we have a lower high in relative strength. And like we've been talking about, we're going to show this next section, when you have waning momentum with price either staying the same or even moving higher, it's divergence between price and RSI. And it's a really good indicator that the next move is going to be down. Doesn't mean everything is going to collapse, just means when price is staying elevated and RSI is rolling over, momentum is waning. Okay, so we're going to get into that a little bit. RSI and price divergence. So here's the C fund, right? S&P 500 going back to 2022. The best example of this is the top in 2022. We had this big rally in 2021. We put in a top right here, right? And we got well over 70 on RSI. So it was overbought in terms of RSI. Price pulls back and then eventually gets higher than this high. But RSI is significantly lower, right? So we have higher prices and lower RSI. And that's what led us to this big decline in 2022. So that was our big, if you were a subscriber back at the end of 2021, we got out of the market. I can't remember if it was this day or this day. It was January 6th. And that was why. It was a very clear price divergence, a big divergence. And then if you continue forward, you got price last November, right? We got 3 consecutive higher highs, but it's not being confirmed by RSI, right? So it's suspect. You get the same thing here. Price is declining, but it's basically consolidating and flat, but RSI is declining. Okay. And then most recently, we had a high that again took us over 70. Price got a little bit higher here in the last couple of days, but RSI didn't come close to being able to put in the same high that it put in back here. And then we had a little breakdown. So we'll see. This is as of Thursday's close. We'll see if support holds again at that 20-day moving average like it did back here. But I think you can kind of see the value of price RSI divergence. And then just an example of it also in the S fund. We had a double top most recently in the S fund, but a big divergence in RSI. And then we had a gap down. So you can see the value of it. The problem, quote unquote problem, is you don't always get price divergence with RSI before the market rolls over. You can have a top and the market just rolls over, right? So sometimes, if you get a pullback and then price continues back up for a double top or even higher, and you get RSI declining, that's a great setup. It gives you an opportunity to get out of the market with very little risk. The problem is you don't always get that. So if we were waiting for some kind of price divergence back here, let's say, you never got it, right? Because the market never came down and pulled back up and got to a double top or a higher. It just kept going down. And that's what happened here and here and here, right? So it's great if the market gives it to you, right? If it gives you that setup and you can see it. But if it doesn't give it to you, in this case, we got down to that 20-day moving average line, poked above it, and then once we got down below it again, like that was it. So we have a lot of tools in the toolbox, and price RSI divergence is one of them, but we're not always fortunate enough to get that set up. Okay. All right. So bonus chart, TNX, which is the 10-year yield, and the F fund. So we've been talking about this for a while. The 10-year yield, if you looked at a long-term chart going back to early 1980s, yield was up here at like 15%. So it took 40 years, right? 40 years for 10-year yield to come down and bottomed out here in 2020. Okay, that was the bottom of a 40-year downtrend. So we're just beginning a new uptrend in yield. Okay. Everybody's talking about how high interest rates are right now. They're going to be going higher for a long time. This is an impulsive move. 1, 2, 3, 4, 5. Then we're going to get an ABC to correct that. And then it's going to keep going higher. This is going to be ultimately a 1. This will be a 2. And it'll just, yield is going to keep going higher, which means interest rates are going to keep going higher for a long time in the big picture. So if we just focus on where we are right now, a couple of things I wanted to point out about this. It's a very, very clear Elliott wave pattern. You got a 1, 2. Within this 3 wave, we have 2 5 waves. Okay. You got 1, 2, 3, 4, 5. Right. That's the longer term 5 wave to make that 3. But within that, you got 1, 2, 3, 4, 5. That gives us the 3. A, B, C gives us the 4, and then the 5. So it's a really good example of kind of a complex Elliott wave pattern. But where we are right now, Uh, A, B, C for 4. We broke through in a big way this week. We broke through that downward sloping trend line. So we are off to the races with yield. Okay. So when yield gets back above this point right here, it doesn't need to get too much above the 3 to be a completed pattern, right? Once it gets above that 3, technically it's a completed pattern. And then theoretically, it would go as high. So the low was here. It would go this far theoretically. So the target is really about 5. I'm expecting yield to get up to about 5 and then roll over. And there's a lot to talk about when we get there. But for now, it's a really good example. So yield is when yield goes up, right, which we're saying yield is going up from here for another leg for a 5. When yield goes up, the price of the F fund goes down. And it's almost the reverse. So F fund is not tied to the 10-year yield, but it's close enough. So here's what the F fund looks like, okay, on the same kind of idea. So back here in 2020, right, here's the low in May 2020 of yield, and it's the high price in the F fund, right? So we come down for the same pattern, 1, 2, 3, 4, and we're looking for this next 5 wave down. So once we take out these October lows, we're going to be looking for a bottom. And when that bottom comes, it's going to be a great buying opportunity for the F fund. We're not there yet, but you can see the gap down in the F fund is very similar to the gap up in yield. Okay, so they go inverse each other. So we're looking for the F fund to come pretty significantly lower, but once it gets there, it's going to be a good buying opportunity. Okay. TSP fund charts, weekly charts for the week. This is Friday morning, so we'll see how Friday plays out. But C fund weekly, right? We came up and hit basically 44.50 1, 2, 3, 4 weeks ago. Hit 44.50 and got rejected. Had a consolidation week, came up last week, hit 44.50, couldn't get above it. Hit 44.50 at a high this week, couldn't get above it. So that is some pretty clear resistance now. We got 4 weeks of resistance at 44.50. We got a double top in RSI, so that's not really telling us a whole lot on a weekly basis because we don't really have divergence there, right? We have price bumping up against 44.50 and it's flat, and we also have RSI, which is basically flat. MACD is still expanding to the upside. So if I was in the stock funds right now, honestly, if I was in the C fund and I was trading it on a weekly basis, I'd be watching this RSI, but I wouldn't be too concerned about it. If we broke below this low, I would be concerned. All right, S fund. S fund is putting in. We talked about it last week. This is more of kind of a textbook. If you go to Google and put in a flag pattern, this is what you would see. You have a down. This is a bearish flag pattern. You have a downtrend, and then the consolidation is an A, B, C, D, E. And once E is completed, the next move is down. Okay, it's not 100%, but these wave patterns work out. One other thing to point out about this one, let's see. How did this go? You could count this in a couple of different ways. This is basically 1, 2, 3, 4, 5. Okay, it's a little bit complicated looking on the weekly chart, but this is an impulsive move down, right? Followed by these corrective moves. So 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, 3 waves are corrective, 5 waves are impulsive. So this whole thing is a correction to this down move. And the implication, once this correction is complete, the next direction is in the same direction as the prior trend, which in this case was down. And theoretically, it would be the same length as this move down. So the S fund, if this pattern plays out, the S fund is going to have another big move down. Doesn't mean it will. If we break up here and if we get above A, then it's going higher. Then this pattern failed. So that's what you're looking at. If the S fund gets up here above, on a weekly basis, 1850 or so, then you're good. You're back in the S fund. But the pattern implies a move to the downside. Okay. I fund definitely struggling, right? It's got a downward inclination in price over the last couple of months. Cannot get hold support above that 20-week moving average line, and you get RSI declining, and MACD has already turned negative. So the iFund is not looking very good here on this chart. But like we keep saying, it's very dependent on the dollar. And we're going to look at that really closely, the iFund and the dollar, in the newsletter this weekend. And so you're definitely going to want to take a look at that, because the dollar could certainly reverse from where it is right now. So when the dollar goes down, the iFund goes up, and it's almost a perfect inverse correlation. So definitely you want to take a look at that on the newsletter this weekend. And the F fund, like we said, this is we showed the daily chart with the TNX. This is the weekly chart. It's the same kind of thing. 1, 2, 3, 4, and we are beginning this 5-leg down, right? So even on the weekly chart, you can really see F fund has been struggling for weeks and can't get back above that 20-week moving average line. This week was definitely a breakdown, huge breakdown in RSI, and big breakdown in MACD. So the F fund right now is not the place to be. It's going to be. When we get down here somewhere, the F fund is going to be a great buying opportunity, but we're definitely not there yet. Okay, that is all I got. If you guys have questions, please post them in the comments and we'll get to them. And hope everybody has a great week.